Good morning, retail traders. This is Washboardjim with a sneaky snake trading strategy where I talk about chart patterns, moving averages, and being in the now. And if you watch me, you know that I talk about irrational exuberance almost on a daily basis. With this run we've had with AI, it's way overextended. And when you have a huge run like this, we're talking about AI sector, you got a bubble. And you want to catch that bubble and you want to recognize that bubble. Usually when you break new highs, things like that, you know you're in a bubble. So parabolic stock. Now I'm one of the best knife catchers out there. I love to catch knives. I talk about it every day. That's how I come up with this sneaky snake trading strategy, was to catch the pullbacks that happen almost every day in a stock and then try to find the supports and get out at resistance. So my strategy, I talk about chart patterns, moving averages, and being in the now. So I'm real good at a knife catching, and we're going to go ahead and talk about one stock that NVDA. I always like to look at the website just to see how they're doing, but NVIDIA I always go straight to the news, and here if you listen to CNBC and Schwab, they're all starting to talk about irrational exuberance. So they're slowly hinting to you that this market is way frothy and that it needs to consolidate. And the consolidation could happen real fast, couple days, maybe one day, maybe a couple days, and I think that happened last week. And we could get some more pullback because these things have run way too damn much. I really want to emphasize that with enthusiasm. Way too much. I mean, you go from $1 to $50. Is that like Neil? Neil ran from $2 all the way to 60, and look where it is now. They run way too much, but that's a whole different sector. The EV sector. So I like to look at the news, see if I see anything in here about the news and the way people are talking about the sector itself, and everybody's frothy. They don't know. They've never been here. I've been watching this market for 20 years. Okay? 20 years. And I've not, in that 20-year period, I've seen runs, I've seen breakouts. COVID was a good one, but I've never seen anything in this kind of market. So it might be something new. We might be looking at a new plateau, which I talked about last week. You know, musicians, for used as an example, you get one good guitar player, Eddie Van Halen, he comes in and he sits in with you in a band, and you think you're good. I mean, you think you're excellent, and then all of a sudden someone in there comes in there and you say, God darn, man, I've never sounded this good in my whole entire life. I mean, I'm really sounding good. It's because you got a good leader in front of you, which we don't have in the United States right now. We do not have that good leader that we need. But the market itself, we could be going into a new stage, a new plateau, you know, rubbing off on the old resistance and building up new support. But we need to consolidate this run, this AI run. And the market might broaden out due to that for a short period of time. So let's get ahead and look at the chart. Oh yeah, I got some more news. So I read this news on the Friday. And I told the room, I said, man, David Tipper slashed his position in the video, and you're hearing everybody else talking about exuberance, irrational exuberance. And things are, I mean, I'll show you the stock. You'll understand why things are way out of whack. So we pull back to a solid support, and I am number one at catching these knives. So this is the run we've had from after the new year started. This is when I called this huge run out. You won't see nothing like this on the whole chart. If you pull up, where's the monthly one? 15-year monthly. We had a nice little run up through here. Then it consolidated. We had the big dip, We broke out, we pulled back, and then we had the continuation run. I mean, this thing ran from within a year and what? A year and 3 or 4 months? 5 months? 1, 2, 3, 4, 5. Year and 5 months, year and a half. This thing ran from $100, $120, all the way up to $974. Can you know how? That's a 900% increase. Hedge funds are happy to get 20% a year. A year. They're looking at 900. They've not made so much money their whole entire life than what they've done here on the first of the year. And last year, they're giggly. I mean, they don't want to let it go. But it's got to go. It's got to consolidate. It has to do it. I mean, every run has a pullback. Every run has a pullback. 6 to 10% maybe. I don't know. This is huge. So we'll go to the yearly. Daily. We bounced off to 63. This is a new moving average that I've been starting to implement into my trading strategy. And I've kind of thinned it out a little bit. We've got the 200 SMA. We've got the 63 EMA. We've got the 21 EMA. And we've got the 9. Now she bounced up off the 21 over the 63 EMA and started to break out pretty nice right there at the end of the year. Now we're at an all-time high hard resistance. So yeah, the reason that I think we're going to have a pullback is one fact that this thing is way overextended, and that fat cats realize that. They know it. I mean, they're up 6, 7, 800% on this stock, 900% in a year and a half. You're a fool if you don't learn to take profit on something that's run up so high. So I've traded. I mean, I was in $500 and I run it up to $650, and I've been scalping it ever since. And it's the same thing with MSCI. Way too high. And I'm going to show you the chart on it. You're just going to, unbelievable. They're bubbles. They're huge bubbles. So we'll go to the 1 hour time frame on this. And our support, we're going to see if we can, we're using the moving averages on this here timepiece. So I'm going to raise my support, the one I have right now, above the 200 SMA on the 1 hour time frame. And I'm going to put it above this here trend line. I guess I got a reason for that trend line. We'll see what it is. Pull up the, looks like an inverse head and shoulders. Yep, that's exactly what it is. But you got a little rising wedge. It's expansioned out, the wedge, and then you got a head and shoulders. 1, 2, head, and then a shoulder line. So this thing can easily pull back and find support off that right shoulder line. Now this is on the 1 hour time frame, and I got 90 days on here. So let it come back, see if it can find the bottom of this channel. If it doesn't hold, then it's going to automatically drop down here to right around the 650 area. Well, maybe. I don't know. This spot looks pretty good, right around 703. And then you got another one right here. First, we got to see if it's going to hold that trend line. If it doesn't hold that trend line, it can definitely drop on down and hit this other trend, which is I gotta see. I can't see that, so I'm going to do something here. Right there. Yeah. Set an alert right above that 680.89 area. So this is the 1 hour time frame. We're going to set an alert right here on the bottom of this here first channel. Nope, not that. Almost got that wrong. Yeah, there we go. We got it set right there. So I'm thinking somewhere around 823. That 200 SMA is going to be your support. If that holds, that's fine. But it can drop down here to right around a little above 810, 811, and be a stronger buy. In fact, there's your resistance right there. Tweezer top. Right around 807.35. I like to see that hold. 807.35 come Monday and see that hold. And then run back up and break that 200 SMA. And then run back up and try to find that top of that there resistance channel of 883. So I'm looking in here to create a Darvis box and have this here 807.35 be the solid support with resistance to break right around 883.77, and let this thing consolidate and let it kind of work its way out, because it's had too big of a run in a short period of time. I've never seen anything like this in 20 years every single day. It's unusual, it's unprecedented, and it could be a beginning of a bigger run, but we've got to consolidate this too big of a run. SMCI. Now this is a different kind of chart that I use. It's called the TTM squeeze. I love using this chart. Now I also called the all these. Look at this. I've been here way too long, 20 years, every day, 5 days a week, with just a very few vacations, and I'm seeing something like this. I don't give a shit if they make gold out of dust. It's still way too damn high. And it's got to consolidate. It's got to pull back. It's the best time for me to be trading right now, when you have parabolic runs. I mean, I learned a long time ago, man, when you break irrational exuberance, Greenspan, I was here watching it. I was going, man, this is crazy. All these companies came out. Everybody wanted to be the big king in the internet business. Only 2 or 3 survived. Same thing with the auto industry. Everybody wanted to build a car. Then only 4 or 5 survived during the Industrial Revolution. And the same thing will happen with NVIDIA. You'll have 3 or 4 of them up there that are leaders of the pack. And then you'll have all the other ones that are just being the wannabes. So when you have a huge run like this, expect at least a pullback to 50%. At least. So at the beginning of the year, we were here at 269, 270, and we've run all the way up to 1229 in only a few short months. Hello. This was a great play come Friday. Here, I'm going to show you what we did first. Now, I'm the master of the sneaky snake trading strategy. I like to catch these knives. If you can count to 3, you can learn to trade with me. So draw your snake in. You got a little head and shoulders right here. Left shoulder, head. So you draw your trend line down. That's the snake channel. She starts to break out. She broke out of the channel. We had a doji right here. And then this one here had a full candle breakout. And it pulled back to the top of that trend. Jimmy says, always watch and make sure you do not jump in the trade once it breaks out of the channel. Let it form a pattern. You do not take this trade until it starts to form a pattern. A bullish or bearish pattern. It doesn't matter what it is. You go into Google, type in bullish, bearish, stock patterns. Go to image. Learn these patterns. Learn these patterns because you got your snake. These are all bearish. These are all bullish. These are all bearish. And these are all bullish. Learn every one of them. Memorize them. Tell yourself, I ain't doing anything else this weekend, but I'm going to learn these patterns because this is what Jimmy teaches. If you don't learn them patterns, you're not going to be successful. I mean, you will. There's always a way to trade the market, but you're not going to be successful in the way I trade because I like to catch it right when it gets ready to squeeze out, buy it, and sell it at the breakout and get out of the trade. And you're talking big bucks when you do that. When you're able to squeeze and catch that right at the point, you're able to make some pretty good money. So SMCI. Here's the pattern. We've got the breakout, the pullback, and then we had the continuation breakout here. So what happened? We created a wedge. We created a falling wedge out of this here pattern. So I'm watching the wedge, and I'm still counting to 3. For example, you got your trend line, you got your snake, you got your trend. So we hit the top of that trend 1, 2, 3 times. Then she pulls back, and then she finally starts to break out and respect the top of that trend line. So now you're a little excited. She broke out here with that spinning top, and then she broke out of here with this other candlestick pattern. So now you're out of that trend. When you get out of that trend, you got to look for a pattern. You're not in the trade yet. So this is called a falling wedge. This is a bullish pattern. It's called a falling wedge, or not even an expansion pattern. In fact, let me see if I did that right. No. Take that bottom candle. There you are. That's where you're supposed to have drawn it. So that's a falling wedge. You got the snake. You got the breakout. You're still not in the trade yet. Okay? You're not in the trade yet. Then you got the falling wedge. You got the falling wedge right here. And then you have the breakout of the falling wedge. So if you can count to 3, you can trade with me. 1, 2, 3. If you can count to 4, you might get a little bit more. 1, 2, 3, 4. So you come up here and you got your wedge. You started to create the flag. You got your fourth top. You come back down for the third time. If it does not hold this support, you're going to go ahead and drop more. But it went ahead and broke out that third time, hit the 200 SMA, and continued the run on up. Once you hit that 200, it consolidated and run off that 51 EMA, and then went ahead and break out. So you got your snake, breakout, pull back into a wedge, snake, breakout, pull back, created a pattern, falling wedge, and then broke out of that pattern, and then you were bullish after all that was done. And your resistance level was this previous high. So that's when you want to get out of the trade. That's called a double top. And you're getting into close, and it started going down on you. So you had a chance to get out of this trade. From the time you took the trade on the third dot down, hoping that it would go ahead and break out, which it did, which gave you confidence, and you could have got out of this trade with a couple $100 right once it hit the 200 SMA, which I demonstrated in the room. And that didn't take very long. The wait, I mean, yeah, you had to wait. Once you recognized the sell-off, let's say the time was started right around 9, 10 o'clock, you had to wait all the way to 12:39 to take this trade. So it gives you all the time in the world, and it's the easiest trade to ever take. Once they start to have the snake, they develop a pattern, they break out of the pattern, and then you're bullish. It's real simple. It's real easy, and I can guarantee I can take any bad trader if they just follow this strategy, learn them patterns. Whatever breaks out of this snake, I don't care what it is. Where did I put them patterns at? You got the snake coming down. It creates a descending triangle. You know you could be bearish. But if it comes up and breaks out of that descending, it could start to go to an uptick. You have what you call a bearish flag. You have a rising wedge. You have a symmetrical flag. This can go either way. Don't take it for granted that it's going to be bearish, because it could be bullish. You have the continuations, positive patterns that will bring you to the upside of a trade once it breaks out of that snake. You're coming down, and then it breaks out of the channel, and it creates an ascending triangle. You're coming down, and it breaks out of that snake, and you start to develop what you call a bullish flag. It breaks down, sells off, then you have a bullish wedge. It can break down, and you can have that symmetrical flag, which I was talking about right here, which can continue either way. You're coming down, and you break out of that flag, see? And you start to develop. So this, you got to just watch and make sure it breaks 1, 2, 3. If it doesn't break out on that third, then you start to be a little bit bearish. Like right here, 1, 2, 3, didn't break out. It came back down on the fourth time and knifed. You got your head and shoulders. You know you hit a resistance. You got your falling wedge. You got your double top. You've got your triple top. You got your inverse head and shoulder. Again, when you're coming down, you create a head and shoulders. You're coming down, you create a descending triangle. You're coming down, you hit a double top, you know to get out of that trade. You're coming down, you hit a triple top, you know to get out of that trade. You're coming down, you got your inverted head and shoulders, you know to take that trade on that right shoulder. You're coming down, and you got this falling wedge, you know to take it on that third or fourth dip if it doesn't pop and break out of that channel, or take it once it breaks out of that channel. You're falling down, and you got a double bottom. You're falling down, and you got a triple bottom. Darvis box. So yeah, you're falling down, and you come out, but you don't get a double bottom, you get a higher low, which is very bullish. When you get a double bottom, you're less bullish, but at least you know that it's a chart pattern. You got to watch. Excuse me. You got to watch them candlesticks and determine what's a bullish candlestick and a bearish candlestick once it breaks out of that snake. So right here, we got the third dot. Okay, let's get here. And there's your double top right there to get out. Triple top. 1, 2, 3. Get out of that trade. So here you got your third dot down here. What you have getting ready to break out of this pattern is a hammer and a nice long leg doji spinning top with a tweezer bottom. That's a bullish candlestick pattern. Then you know, I mean, right then on the third dot, it's the last chance. It's got to break out. And then you get these two bullish patterns. Time to take the trade and give it a shot and set a tight stop loss because you're closing in, you know. What time is it? It's 12:37 my time in Missouri. I tell the room, I say, hey, the fat cats are off the water cooler. They're back at their desk. It's 1:30 Eastern time. They're ready to start trading and play the power hour. So folks, get ready. We might have us a run. The time of the day can determine how you want to trade. You trade that first hour and a half. Then you come back in and you start doing your homework. You buy the dips. And then you get back in it at 1:30, maybe. Depends on which way the market wants to trend that way. And then you run it to power hour. And then you got your power hour trades. So everything's kind of developed in a time frame when I trade, my strategy. So a hammer, spinning top, break out to the 200 and get out of that trade. Once you hit that 200, take your profit and walk away. That's the 200 SMA on the 1 minute time frame. So that's it. NVIDIA and SMCI, I just want to explain, you know, irrational exuberance. I want to wish everybody a happy birthday. Now contain that irrational exuberance and let's enjoy this AI run. This is the best time. I'm in my prime. I'm in my prime when I'm catching knives. So my focus is basically on AI, and I'm going to try to run everything else out of my mind because I think this thing's had too big of a run. If you're at 900%, hello. I've been here 20 years. I've never seen anything like it. We are in a bubble. And I'm the first one to come out and say it. And I just want to make that real clear. So we're going to go ahead and get on out of here. Just remember that this is the sneaky snake trading strategy where I talk about chart patterns, moving averages, and being in the now. And if you want to improve your trading strategies, learn how to use them patterns. The patterns is it. I mean, I'm telling you, you can swing trade them, you can scalp them, you can day trade them. But once you understand, everything pulls back. And when you have that long trend line coming down, that snake, you're going to end up forming some kind of pattern here. 9 out of 10 times, unless it just gets news and starts to shoot on up. Unless it gets news and just bangs right on out of there and runs on up, have another parabolic run. But guarantee it, 9 out of 10 times you're going to form a pattern once you break out of this channel. And if you really want to be profitable, just learn this. It's so easy. I've been at it for 20 years. I wish I'd have known this 20 years ago. I'd be worth a ton of money. Okay? And it just finally sunk in the last couple, 3 years. I've been good. I'm a good trader. I've always been a good trader, but now I'm an excellent trader because I learned something. I learned how to build my own strategy that works. And that's what you got to do. You got to get in there and you got to build your own strategy. Take pieces and bits and learn skills from other traders and develop in your personality. And if you can do that, you will be successful. So I'm going to get on out of here. This is the Sneaky Snake Trading Strategy, where I talk about chart patterns, moving averages, and being in the now. And I'm more bullish than I've ever been, and I'm loving catching these knives. We're way too damn high. We'll catch you later. Have a great day. Retail traders.